Hi, welcome to the Market Alert for Tuesday, the 27th of July 2015. And in yesterday's pre-market session, the market moved sharply lower there by 200 points. And no doubt this had something to do with the Chinese Shanghai market, which had its biggest fall yesterday of 8%. Market seems to be a bit calmer today, but certainly the market heading lower in the short term. And of course, this is going to have a knock-on effect, but as with all of the Western markets, they're doing their damnedest at the moment to hold against the prevailing bear market tide that is coming across from China at this time. So the market down 200 points, down to 17,400 in the pre-market session. Again, you can see there the market putting in the selling, then the buying coming in as they bring the market back towards the 17,500. But eventually it caves in and we get a sell signal there with the market moving lower, heading back down towards the 17,400 during the quiet part of the session there. So certainly the 20 plus points on this trade as the market heads back to the downside there. In the start of the afternoon session, New York evening UK, you can see the market moving high there, but again running into trouble at the 17,450 level and then reversing and coming back again. So all trades yesterday ebbing and flowing with the market and the resistance lines, and also showing a profit for each trade. The market up on the overnight, and you would expect that for this very reason that we looked at yesterday in the daily chart. We drew in all of the possible support areas, and including the most important one when the Greek deal was announced on July the 6th. You see the market gapping there and the buying coming into the market, and this proved to be the area of support for yesterday's trading session, which is down at the 17,455. A lot of volume yesterday, the market coming off the lows, which is indicative of the market moving back to the upside as well. How far the market goes, well, that's dependent upon how much more the Chinese market is under pressure and how much more selling goes on over there. But certainly the first resistance level to the upside is the 17,621. The biggest economic news item this week to move the market back to the upside is the advanced GDP, which is going to be out on Thursday. But today we also have the consumer confidence index released at 3 p.m. High impact news item, forecast to be lower. And again, all of the economic news items forecast lower at the moment. The economy is an illusion. It's not doing as well as as the government would want it to do, and that's because it's purely and simply been supported by a massive amount of QE money for the last 7 years. This is coming to an end unless, of course, things get too bad and Yellen decides to print more. And I've not discounted this at all, because there is the possibility that that could happen even before interest rates actually rise. And that's not just my opinion either. As these economic figures start to come out and they're showing that the economy isn't improving and it's merely rhetoric, then again, you know, the QE stopped last year, and now we're seeing the effects of a debt market pumping the market up no longer, and that is that the bubble is starting to burst. We've already seen it with China. That's dropped markedly. Commodity prices have fallen out of bed, as have crude oil prices, and again all characteristics of a massive market correction coming. And finally we've got the implied volatility 1244 for Friday, and quick refresh there, 1398 is what you'd expect as the market is down for the 6th day in a row for yesterday, so expect a bit of a bounce from this point forward. Right, that's it for today. I will see you in tomorrow's edition. As ever, thank you for your support and also for watching. See you in the next one.